Hey, what's up, everybody? Welcome to the Chapter 16 guided assignment. This is our first time to go at some real managerial accounting since our last guided assignment was just a review of the financial accounting stuff from the previous semester. So let's take a look at it. There's a lot to read. You'll see there's two questions on this one. The first is for the Stretch and Trim Carpet Company. They sell and install commercial carpeting for office buildings. They use a job order cost system. When a prospective customer asks for a price quote, then the estimated cost data are inserted on an unnumbered job cost sheet. If the offer is accepted, a number is assigned to the job, and the costs incurred are recorded in the usual manner on the cost job sheet. After the job is completed, reasons for the variances between the estimated and actual costs, are noted. The data are then available to management in evaluating the efficiency of operations and in preparing quotes for future jobs. So on May 9th, Stretch and Trim give London Consulting an estimate of $18,044 to carpet their newly leased office. So here's all the basis for their estimate. And then I think it wants us to complete the job cost sheet. So the job cost sheet is broken down into the estimate section, and then the actual costs, and then an explanation of why it's different, or the variance. So let's just take a look at it. So here's all our estimate information. So it says our direct materials, 400 meters at $32. We could multiply that out, or up here it actually gives it to us. 400 meters at $32 per meter is $12,800. So that's the total for direct materials. Then the direct labor, 30 hours at $20 an hour, so that's 600. And then we just summarize over here, direct materials, 12,800, direct labor, 600. And then our factory overhead is, it tells us that our factory overhead is 80% of direct labor costs, or $480. We can add those all up, or they're already done for us up here. So it's 18,044. So this first section is really just us putting into the job order cost sheet this information that was already given to us. That's pretty easy. The next section, now we're going to put the actuals in. So again, it gives us the information. So there were two different draws on direct materials. The first was 360 meters at $32. So I just multiply that out. That comes out to 11,520. Then 50 meters at $32. That's $1,600. And then we just add them together. So our total direct materials was 13,120. Our direct labor, they had 18 hours at 19 and then another 18 hours at 19. So 18 times 19. So our direct materials were 13,120. Our direct labor was 684. And then remember, our factory overhead is 80%, it tells us, of our direct labor costs. I'll take our direct labor, 684 times 0.8 for 80%, and I get 547.20. It tells us up above to round to the nearest dollar. So 547, 13,120 plus 684 plus 547 gives us 14,351. So our costs were, what was that? About $800 over than from our estimate. So the last thing it wants us to do is to tell why we have this variance. And it says, what is the best explanation for the variance between actual cost and estimated cost? For this purpose, assume that the additional meters of material used in the job were spoiled, and the factory overhead rates were proven to be satisfactory, and an inexperienced employee performed the work. So we'll read through these, and on C, we see the direct materials cost exceeded the estimate by $320, which it does, because 10 meters of material were spoiled. Direct labor costs exceeded the estimate by $84, because an additional 6 hours of labor were used by an inexperienced employee who worked for $1 less per hour. The factory overhead costs exceeded the estimate because an additional $67 of factory overhead was allocated because of the increase in direct labor. So C explains all of the variances between the estimated cost and the actual cost. There we go. Whoops, looks like I made an error right here. And you can see there was no 44, so that can't be right. So 13,880. That makes more sense. There we go. All right. So there's the first problem. Not too bad, as long as you don't make any mistakes with your calculator. So the second problem, Technology Accessories Inc. is a designer and manufacturer and distributor of accessories for consumer electronic products. Early in 2013, the company began the production of a leather cover for tablet computers called the iLeather Original. All right, this cover is made of stitched leather with a velvet interior and fits snugly around most tablet computers. In January, $750,000 was spent on developing a marketing and advertising materials. For the first 6 months of 2013, the company spent an additional $1.4 million promoting the iLeather. The product was ready for manufacture January 1st, 2013. They used the job order cost system. Here's their direct materials. There's actual production process where they cut the leather and stitch it. Machine cuts and stitches it, and it requires 1 hour per 125 iLeathers created. After it's cut and stitched, it's brought to assembly, and direct labor cost is 50 cents per unit. The completed packages are sold to retail stores. Salesforce is compensated with a 20% commission. Total completed production was 500,000 units. They sold 460,000. Wholesale price was $40 a piece. And then the factory overhead is applied. Okay, so there's a ton of information. They just sort of barf information all over you, and then you're supposed to figure out how to use it all, okay? So the first thing we're gonna do is what we're doing is making an income statement. So it helps me sometimes to just remember what these will be. So sales will be my top line, minus our cost of goods sold will be our gross profit. Then our selling expenses, it tells us that we have a commission to our sales force. And then we have this cost, where was it at? Cost up here, $750,000. So that would be for advertising design to set up our advertising. And then we have another 1.4 million for the actual advertising. And then at the bottom, we'll either have an income or a loss from operations. All right, so once I have this established, then I can just start figuring out each one. So my sales are just going to be the number of units sold times the sales price per unit. So that's 460,000 units sold times $40 per unit, $18,400,000 in sales. That's pretty good. All right. Second, we have to figure out our cost of goods sold. So remember, cost of goods sold will be our direct materials plus our direct labor plus any manufacturing overhead. So our direct materials are given to us right here, 1540. Our direct labor is given to us right here, 50 cents per unit. And then to figure out our overhead per unit, we have to do a little math, because this tells us that the machine requires 1 hour per 125 iLeathers. So if I produce, let's see, 500,000 of them, is that what I need to do? No, that's not what I need to do. I'm going to say if it's $1,250 per machine hour, and each machine hour can do 125 eye leathers, then I know that it's $1,250 divided by 125, or $10 per eye leather in overhead. Okay, so I have my direct materials. So now my cost per unit is $15.40 in direct materials, 50 cents in direct labor, and $10 in overhead. $25.90 per unit. So then I could say if I sold 460,000 units, 460 times $25.90 gives me a cost of goods sold of $11,914. Then my gross profit is just going to be my sales minus my cost of goods sold. So I have a gross profit of $6,486,000. That's a pretty good start. All right, my salesperson's commissions were 20% of the sales. So I know sales were 18,400. Multiply that by 0.2. Salesperson commissions were 3,680,000. My advertising design, it tells me up here, was 750,000. My advertising expense tells me up here was 1,400,000. So if I add all those up, that'll be my total selling expense, 3,680,000 plus 750,000 plus 1,400,000. It's 5,830,000. My gross profit, 6,486,000 minus my total selling expense, 5,830, is a net income from operations of 656,000. We'll go ahead and do a check just to make sure we're good to this point. And we are, so that's good. So we'll come down here, it'll say determine the balance in the finished goods and work in process inventories for eye leather. So we know that if we produced 500,000 and sold 460,000, then there must be 500,000 minus 460, 40,000 units in finished goods. That's stuff we've completely finished creating, but it hasn't been sold yet. So I'm going to multiply that by our price, which was $25, or not our price, but our cost per unit, which is $25.90. And that gives me the value of my finished goods inventory, 1,036. Work in process is a little bit more confusing or challenging because not all of the costs have been applied to it yet. So it tells us somewhere right here. So there's an additional 22,000 cut and stitched eye leathers waiting to be assembled. So at this stage of the process, they've had the direct materials applied to them. And they've had the overhead, which was $10 per unit, because that was part of the machine doing the cutting and stitching. And it says they're already cut and stitched, but it hasn't had the direct labor applied to them yet, 50 cents per unit. So we're going to do $25.40 as the cost of those units that are waiting. So they're cut and stitched, but waiting to be assembled. We're going to multiply that times 22,000. And we'll get 558,800 for our work in process. Check our work and we're all good. So I hope that was not too bad for you, and I hope this helps you with the rest of the work for the chapter. Good luck, and don't be afraid to reach out if you have questions.